Hi, Warriors. How's everyone doing today? It won't be boring by the end of the day. I promise you, Bran. Thank you. Hi, AJ. Patrick Bolger, break a leg. That's my advice. Kman, how are you? George, AJ, team, how's it going?
Hey
So,
Dale.
yesterday, hey guys. So, yesterday we were trading around here in copper. I said I think you could sell it here with stops over 375. Came out pretty good. Looks like a bear flag after a test of a breakdown. So that's copper, right? So tell me if you guys can see a theme.
I
Okay.
see I see something that's countering that theme, but we can
Okay.
talk about that here in a second.
Okay, fine. And here's crude. And here's gold. And here's bonds. What's the message? It's open to the floor. Crashing crude, copper. I guess Blake is bullish.
I'm not. I wouldn't say I'm bullish, but I don't know.
All right. Okay. Well, the trend looks down to me. Copper hasn't done anything in a long time. Crude is crashing. Gold's under pressure. Bonds are railing. The answer is there's a deflationary impulse coming
Well,
through the
I'm
markets
glad
here.
that you brought that up, and I don't want to hog the conversation. I know Kman's here. We don't have Ryan, by the way. Ryan is off to a football game. We call it soccer.
Yeah.
Most of the rest of the world calls it soccer. I'm joking about that. But he's off. He's off football game.
Ryan's very smart. He blends. He doesn't get overcooked in the business. He knows how to take breaks.
Right, right,
Smart.
right, right. Yeah, that's and then you take Stelios that just he's on vacation all the time. Oh, he's not even here to defend himself. Anyway, what I wanted to say is China's economic data last night. We had inflation, CPI and PPI, which still is in a deflationary trend, believe it or not. So it's still deflating. So maybe that goes along with your theme there,
Yeah.
Coach.
Yeah. I think it does. So
Yeah.
eventually, stocks don't act great during deflationary times. They act much better in inflationary times.
Mm.
Because there's growth, there's spending. Deflation is, the whole world pulling in their horns because either they're broke or they're afraid to spend and selling all kinds of assets to raise cash because cash becomes king, just being liquid. And the bonds, rates will drop because of that, and you could have a pretty good move in bonds. I think we're close to completing this first wave, but this is just the first wave. So, we'll end wave one and then we'll get a two. But I don't think this is just a rally and we see new lows in bonds and new highs in yields. I'm not in that camp. So,
Well, we did have a 10-year auction yesterday, and
how'd it go?
we have a 30-year today. So
How'd the 10-year go? How is the bid to cover? Do you know?
what was it?
45. Not ecstatic. The theme, the small theme standing out was that there was more foreigners than locals going to the auction. Um, that may be a bit normal because the Japanese lifers had said that they might go back to the bond market again, but that's perhaps a theme that's going to be more over time than just on the one auction. Also, we'll have to see that. But it does possibly explain at least a small part of what's happening in this constant bid in dollar yen. Because if the Japanese guys go to auction, and they have said that they may go a bit more unhedged. That means de facto net dollar yen buying. So one may explain the other just in small parts.
And
Okay.
Sub, you
So
are
what? So how do you
Sub,
trade? How do you trade what you just said?
Me? Well,
Anyone?
I mean, yeah, okay. I mean, there's this, if, okay, if we would be at different levels where there is less risk of interventions, it would be bullish dollar yen. It's still somewhere bullish dollar yen, if that's the case, okay, if my theory is the case. The problem is we are at levels where it's very, very hard to chase. So I'm just trading around my 150.5 call dollar yen and making
Okay.
some pips on the back of two-way moves that I can see. So
Yeah, sure looks like it wants new highs, but I'm taking a shot here. Not looking for home run balls. I'm taking a shot at the end for it to correct the correction, which is this. Looking
hey, you
for
know what?
it to correct the correction.
I shorted it last night too, because I think the bond market overall, you know, is recovering right now, and yields
yeah.
are going to continue to come down. And by the way,
Can I play the devil's advocate?
go ahead.
US 10s is already
Yeah,
45,
they're up.
nearly 50 BPs lower, and dollar yen is still at the highs.
Yeah, I know. I know.
Today 10 years are popping off a little double bottom here.
Couple of BPs, yeah.
Maybe we rally back to 470, 480. I'd sell it if it happened up there. Hey guys, can I just read one thing that I got from Twitter that I just want to read this from Alex. I know I am one day early for Follow Friday, and I don't normally do this, but I wanted to thank Forex Stop Hunter for the relentless years of amazing face interview content. The amount of knowledge, perspectives, approaches, and personalities and strategies on display.
I love that. That's great. I will retweet that. I haven't seen that
Throughout
yet,
these
so.
interviews is truly staggering, and it is a testament to the boundless potential and adaptability of this profession. Being a family man, a trader, and coach as well myself, I can only imagine the degree of difficulty involved in organizing all these wonderful interviews. Bravo and hats off to you, Coach.
All right. I
From
like that.
Alex.
Thank you. Alex.
I was
Probably
wondering why
listening
none of
in.
my team members retweeted it, so I thought I'd read it.
I haven't seen
Anyway,
it.
all right. Anyway,
Don't be all upset, Dale. I haven't seen it until just now.
All right,
That was 5 hours ago, for fuck's sake. Crying
Yeah,
out
all right.
loud, man. I just got up.
All right.
Yeah, here I'm retweeting it. Don't be all pissed off,
right.
Dale. Don't
All
be
right.
all pissy.
Yeah,
Okay.
I retweeted it too.
Yeah,
All right.
shit. I haven't seen
Yay.
it.
Okay.
God dang, man.
All right. Anyway, S&Ps are diverging up here.
Some
for
people
the
think
1
we live
millionth
on
time.
Twitter. Like, I don't, you know, I look at Twitter like literally 5 minutes a day. I look at my feed when somebody hits my pings me, and other than that, I don't look at it. But anyway.
Yeah. Yeah. All right.
Yeah,
Anyway.
you haven't looked at my post today, Blake.
I'll look at it. I'm looking for everybody's. Jeez.
Good. All right. Anyway, S&Ps still waiting for 44.15.
I am.
Okay.
Yep. We're not too
All
far
right.
away. We're about on what I'm looking at, we are about 21 points away. And I think with Bitcoin breaking out, it's just going to carry risk higher. So
yeah,
I think 44.15 is coming. Could we go beyond that? I think so. Absolutely.
Yeah, look at that. Wow.
Yep.
Yeah, crypto. It's kind of amazing how Bitcoin's blowing out and Ethereum really isn't.
It's all the ETF. It's all the ETF news. It's Wall Street engagement, you know, institution engagement. It's and it's bringing in some of the altcoins just from a FOMO you know, point of view. And and then you got people converting, you know, so there's going to be a lot more transactions in crypto. I mean, crypto is here to stay. Do I think crypto's, you know, Bitcoin's going to 100,000 right now? Probably not, but who knows? I mean, you never know what people are going to do out there, right?
Yeah. I don't know what would stop it now. It's kind of sickening to
Why?
watch it. Because it's such an expensive asset that I don't understand that, has a nice bullish picture. I guess you could just buy it for price, but I still can't wrap my head around. I wouldn't even know how to buy one and put one in a wallet. And have you ever tried to, buy any crypto and take
I own, yeah,
possession
I
of
mean,
it?
I own Bitcoin right now. I actually converted some USDC yesterday into Bitcoin. So I mean, I constantly switch from Bitcoin to Ethereum to dollars, and I'm doing
Wow.
that myself through assets. But I believe, it. Well, first of all, you don't have to buy one Bitcoin. The thing is
Yeah, you could buy a fraction of
you're
it,
buying
right?
fractions of it. So yeah, I mean, if I do it all the time. So. How about
Yeah.
you, Kman? Do you dabble in crypto?
No, 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 no. I don't have a wallet. I just have a bag, to put my teddy bear in when I'm going to get my Bitcoin at $30. So
Well, here, just so you guys can see, and Dale, I got to show you this. This is because this will maybe won't make you sad, but it'll just show you how big of a technical breakout point this is. If you look at this chart, okay, this is a 38% retracement, 161% extension. We are above it. And if you look at this longer term, and I want to take you over to the weekly chart here, this is the all-time high. This is the low from 2022. We're overbought, but we're breaking out. And you can obviously look left and see we can get way, way more overbought than we are on a weekly basis. So don't even think about that for now. We're above the 38% retracement today. We are above the 161% extension today. It is at channel resistance, and if this breakout continues, we'll see 43,000 before you can blink. I mean,
If the RSI wasn't doing what it was doing, I would say there was a chance to short it. But there is divergence, but it's like at 80.
But yeah,
I mean,
look
80.
at the daily RSI it's gotten to 96.
Yeah.
So RSI shouldn't be very relevant. I mean, you can pay attention to it and go, well, it's divergent, but or maybe it's overbought at 80. But yeah, we've been in the 90s. We've been in the 90s. We've been in the 90s. This is since 2018. It's not like, you look at these moves, and if you get going, we could trade up to 50,000 and RSI can still be sub 90. I mean, that's just kind of the nature of the beast when you're dealing with crypto. But I just needed to point out, today is the day that it's trying to break out, guys. If you don't, it's not like it was, a week ago, or it was like, 2 weeks from now. It's today. Today is the attempt at a massive breakout. As we were hesitant, sidestepping right into this resistance. Chris Weston last night, he was like, yeah, it's, wedging. And I'm like, this is it. If it's going to hold, today's the day. If it holds, this is where you should see a little bit of follow through, technically, maybe some institutional follow through going through the 38% retracement. Anyway, it's a big deal. And Bitcoin has been, breaking out higher for like literally the last couple of weeks. So if you guys haven't been watching the triangle breakout and everything else, big moves, and it's carrying through to the rest of the crypto market as well. So
it never sold off when NASDAQ was under pressure. So
no, and Bitcoin's doing its own thing. You can you guys can try to draw some correlations here, but there is institutional attraction at this point, and I'm not willing to stand in front of that. If you guys want to go ahead and try to stand in front of that, be my guest. So let me ask Kman. Chinese data, inflation data.
yeah.
It came in a little, softish. Aussie's still trading softish. What do you feel? How do you feel about that Chinese data that came out?
You know what the main reason was?
What's that?
Pork prices coming down.
Pork
Prices.
Do you mean we could have like
Mushu
pork? Like,
So
that's all I know.
You can, if you want to do the correlation trade, you can sell lean hogs or something of the likes. And I don't know. Yeah, it's a bit weak, but then if you look at it, well, of course, I mean, in FX, things are not that ecstatic right now, but the dollar China didn't move that much, just a tiny bit higher. Yeah, Aussie a bit under pressure. We are turning around that support, right? I think if it breaks up, what is it, 63, 90, 95?
Yeah,
Yeah,
something like that. Yeah.
another leg
I think
lower,
when
but then
Grega was here, this was the level for a pullback he was looking for.
pull back higher or lower?
Pullback lower to he was constructive.
Yeah, he was looking at this, you know, and I don't want to
Okay, so
interrupt you here,
from here high.
Kman. Yeah, he was just looking for a pullback to buy. No, but I want to say that maybe the last couple of days following the RBA, you had people that were probably really positioned long over the last month, waiting for the RBA to hike. They hiked. Obviously, they gave everybody a dovish hike, but maybe that money's out of the way now post RBA, and maybe this is the time to be on the long side of the Aussie. What do you think?
Yeah, well, I am now.
Oh,
So
you are. Okay. And you know what? I haven't been. It's funny. In the ForexAnalytix chat room, I could just go over to the trades room and see that you are long, and so is Ryan. Matter of fact, and I hadn't been in there yet this morning. I've been too busy with updating
yeah,
charts
but
and everything.
I'm keeping it very tight. If it goes through 90 or so, I'm gone. And I don't want to, because if you look at all those things, and if you come back onto your chart, there you go. The 50% is right here. Look at where the 50% is of the euro dollar from the last move. Look at where the 50% is of the cable for the last move. We are in the middle of ranges, you know. So if this is a pullback, then yeah, it's probably going to be based on US rates. Don't forget, there's this 30-year auction later on today, so we don't know how it's
Yes.
gonna go. We have Powell. Um, yeah, there's a lot of stuff around the 50%, and I spoke about it on the Flow Show and already yesterday, right on Face, and I tweeted it out. I think the market is in a state of fear of being stuck. It's the FOBs mode that we are in right now.
No.
If you look at the interest rate differentials, that's exactly what they are saying. The dollar yields came off first, and all the rest is catching up. And if you're an FX trader and you look at yield differentials, you are going to not to see too many really dynamic trades right now, and that's where we are now. I do think that, yeah, that's where we are. I'm rather trade ranges than anything else right now.
Yeah, I think you're right there, Kman, as far as the ranges go. Now let me also mention somebody earlier said the 10-year are notes. That is correct. It's correct. I don't know. I might have used bond. Maybe one of you guys did. I don't know. We got bonds, 30-year notes, everything between basically a 10-year and like a 1 year, and then you got bills, which are less than 1 year maturities, to be proper, if you're a fixed income trader. But yeah, the 30-year bond auction is today. Just FYI. Bran, he had asked about like the euro and the sterling. I'm still, first of all, I'm still long a little sterling and a little euro. I'm just kind of sitting in them. They're not really moving a whole lot. And I feel like exactly what Kman you just said, market's a little stuck. So I feel like these are a little stuck. But at the same time, you take sterling, we broke out of this wedge. We got the 200 DMA. There's a triangle, which you could argue that this was a triangle and we're holding above the triangle. So there's arguments that it's trying to be constructive to the upside, but it is capped by the 200 DMA. Then you got the euro dollar that's still holding the 38% retracement that's shallow enough, holding it above its triangle support, but below the 200 DMA. And so I think they look constructive, and I can't really get like super bullish until they get both of them get above their 200 DMAs. I mean, it's just the euro would have to get above 108, which you guys know I'm looking to short up there. I'm trying to exit my long up there and get on the short side. But we get above the 200 DMA, that's a different story. Same with the sterling. You get above the 200 DMA, and then you're above the 38% retracement. Things turn really bullish after that. So for me, it's like, I go back to what Kman said. It's more of range trading. You got to trade inside of the ranges.
Yeah. So maybe you should take in your time frames, trade shorter term time frames, and lower your expectations.
Exactly.
For what you're not going to get those 200 pip moves. You're satisfied with 70, 80, risking 20 or so.
I'm going out to yearly charts, Dale, and I'm just placing my bets based on yearly charts. Or tick charts. Tick charts.
Oh,
whatever's working for me.
All brokers recommend tick charts.
Yeah, of course they do. Of course they do. But just Brand, you were asking about those, but we should talk about a couple of things before they happen here.
If we could just take Chuck Vincent's question.
Who's?
Chuck in the Q&A.
The
euro sterling, Chuck. I mean, it's all.
Oh, I see it. Okay.
Most of the reason for the euro sterling today and the cable move was after Bank of England's Bill commented that earlier this week he already said that the market may be right in pricing rate cuts for the half of next year. And today, the market, him being a hawk, was expecting for him to push back against what he said, but it did not really. And he did say that rates were likely in a good place now to combat inflation. So him being a hawk, market took it as a bit dovish, and that's why the sterling was a little bit under pressure.
It looks like it could go to 61.8 there, Blake, if we get through that false breakout area. Yeah, 61.8. Yeah,
that's the 50% retracement. 618's right up there. It's wedging into it. So you can see the that's being respected. I should get rid of this. This is because I mean we held the 38% retracement. I don't think we need to see that anymore for now. So yeah, you're right, Dale. I mean, why can't we? That would still be the underside of this trend line that you can see is very well respected. Right. Let me just show you guys if you're not visually.
Kind of like what copper did. You go out and you test a breakdown, weeks or months later, it's at a little higher level, the line, than when it broke down.
Yeah. So I mean, it's definitely doable on a breakout, and that's a I think probably one of the best rundowns of the sterling that you just said. When a hawk says dovish comments like that, it obviously the market's taken note of it, right, Kay?
Yeah, exactly.
Yeah, awesome. Hey, real quick, let's talk about two other things. Today we got Powell. We can briefly talk about this because we got Powell, but we have weekly unemployment claims, which as you know, actually, let's take in the weekly unemployment claims while we can before the government shuts down, and then we don't get to see weekly unemployment claims. We don't get to see non-farm payroll. Only thing we're going to be looking at is like JOLTS and ADP, and we're going to be limited to our views on the jobs market, which obviously the jobs market is in focus right now when you're talking about the U.S. economy, because that's what everybody is expecting to roll over eventually sometime soon. So we'll look at weekly unemployment claims. We'll see what the reaction is, but let's talk about Powell first. Powell is speaking today, and yesterday he offered some comments. I think he was talking it was like a metrics statistics conference or something like that. Opening remarks, nothing to do with monetary policy. That's what we figured. But today is different. Today he is speaking in a panel, and what do you think he's going to say? I think he's got to, say higher for
walk
longer.
It back.
I don't know. I
walk
don't know.
back what he thought at the Fed meeting, or he's seen the market's response to his presser. We really just started blowing off, and I don't know. Do you think he's satisfied with that, or he'd like to take away the punch bowl a little bit here?
Well, yeah, because that's loosening financial conditions considering what had happened since last week. So maybe puts a kibosh on it and says, hey, we got to keep rates higher for longer, and rate hikes aren't off the table. But I don't know. I mean, if he doesn't go down that route, The S&P is going to be trading above 4,400 pretty quick. I mean, we're almost there, but we're going to be trading, probably into some resistance pretty soon.
I think he
What do you
walks
think,
up
Kate?
to. I think he
Go ahead.
walks up to the. Okay, I think he
Go ahead.
walks up to the press every day and going, "Is the every time is the market short or is the market long?" And he goes, "Well, I think this time I'll destroy the bears, and now this time I think I'll destroy the
Do
bulls."
you think that's what goes through his mind every day?
Yeah, yeah. He wants
I'm
everyone to
gonna
be
stick
broke.
it in the rear end of anybody who's bearish today. That's how
Yeah,
I'm
I'm just gonna turn sentiment around and have people get ripped. So
gonna.
I don't know. That's me.
Okay, man, what do you think today? You got any opinions here?
Right, he is at a venue where he could push back against financial conditions softening, because the IMF in their latest reports have been saying that they are supportive of higher rates for longer. So he has a platform to push back a bit against what's going on in the markets right now. But I keep my opinion on Powell unchanged. He's going to walk a fine line and probably cover all the sides of the spectrum again. Yeah, that's basically it, I reckon.
Yeah.
I'm,
Hey,
I'm
let me
afraid.
just can I point out something technically that I think everybody should be seeing? This is the dollar index, just so you guys can see, and this purple line that you see, not there, this purple line right here, you can it was the breakout point, huge pivot. Let me put my support zone back in. Let me move that back, so you can see that breakout point is basically 105.90. And then you go back into like where we're currently at. We reject 105.90. It's been such a huge pivot. It is the 50% retracement of the fall in the dollar. It comes in at 106, 105.90. You guys get what I'm saying here. It's just this really big pivot. So if you're bullish or bearish the dollar, I think you should really be just focused right on 106. And below it, you kind of maybe trade the ranges to the short side of the dollar. You get above it, maybe we get a bit of a dollar lift back to channel resistance, flag resistance, that type of thing. But I think this is a very pivotal level in the dollar. Just if you guys want to, yeah, I think you just need to navigate around it, because it's such a big deal. I think it's a huge deal as far as the dollar index goes.
Your micro work is some of the best I've seen. I mean, I where you really narrow it down to levels that a lot of people aren't paying attention to. They're paying more attention to the swing levels, and you look at these internal levels, and it's an edge. Nice work.
Thank you. I appreciate that. That's what after we're done here, we go to the morning edge and we go through all of these. Find all the key levels that are really important, putting asterisks next to them, because we know how important they are to the markets, and helps traders navigate around this stuff. So appreciate that. Hey, we got just 2 minutes till the data. Let's go ahead and remember, we do have a 30-year bond auction today, but here's the 10-year yields. We have the S&P 15-minute chart. Here's the dollar index. Well, actually, I think we'll put it on. Well, the dollar yen is going to be very closely related to yields, I think. I don't know. I mean, we were talking about that earlier today.
Try again.
Yeah, we'll keep it on the euro. How about that? So you got the euro here.
Euro is maybe the better one.
Yeah. I'm going to pull up the data flash, which is inside of ForexAnalytix, and we'll see the jobless claims data as it's being released, kind of like a Bloomberg terminal, but different. It's interesting. When I started using Bloomberg over the last few years into data, it was just as people realize, traders realize it's really too hard to beat the algorithms when they come out, but you still, Bloomberg's always the benchmark on how quick data comes out. This one's not far behind it, believe it or not. So, and sometimes we'll surpass it. So anyway, euro to the left, S&P in the middle, bonds, and then I'm going to put Bitcoin down. I'm joking. I'm not going to put Bitcoin up. Thought I was going to get a roar out of everybody. So any last minute thoughts here, Dale, Kman?
No, just those continuing claims who have been creeping up. I guess if there's no big dramas in the rest, that's the one that we can watch.
All right. Well, we got 10 seconds, Dale.
I think you could, with tight stops, short NASDAQ 100 and look for, I'm with Tony, that Powell's going to walk back the market's reaction a bit today.
All right. Well, let's see what we got here with the data.
217 on the headline and creeping up the continuing. Ah, moving on.
Not much.
It got revised higher. I mean, it's the data, you know, I just want to get, and I'm going to say this, being a dollar bear right now, I'd like to see jobless claims be at like 250, start to really show some signs of weakness. 250 getting up, you know, back up to 260, 280, not for any other reason but to give us some volatility. I think that would create a little bit of volatility in the markets, but right now it's not too far off of the number, which, you know, this is about as you know, this weekly jobless claims is about as current as we're going to get for you know, jobs data right now. So anyway,
well, do you think there's going to be a shutdown, Blake? Is that why you're saying we're only going to get you know, private statistics? You think
I mean, that's the risk. That's a risk. And I don't, and just for the record, if we have a government shutdown, I don't think it's going to be a big deal. I think it's going to be a big deal. And I talked about this last night. Yeah, you just prolong it. It gets, you know, more than a week or two. Market's going to start to get a little nervous because then, you know, a lot of government checks aren't going out. Then it starts to really grind the economy to a halt. You know, people
what
start
a way to ruin the holidays if that happens.
Oh my God, could you imagine? I mean, think about our and by the way, Veterans Day is over the weekend, so spend some time, thank a veteran when you get a chance.
Are we open?
What
Monday?
It's over the weekend.
Okay.
And you know, the thing is if you take these veterans you know, that are you know, not getting paid going into the holiday, I mean, not veterans, I'm sorry, active military, I needed to mention that. That's going to be pretty devastating to a lot of families out there. Frickin' politicians, they don't care. They don't care. Yeah. That's the sad thing. Anyway,
watch football. Not CNN.
Yeah. And by the way, if there are any other Marines out there, speaking of birthdays, any other Marines, happy birthday to you tomorrow. Early happy birthday to you, fellow devil dogs in arms. So Dale, I'm going to pass it over to you.
Okay, can you help me promote Patrick Bolger? And I want to say about veterans, you know, you may not like the politics of a geo problem or a war, but you have to always be for the troops that would do what 90% of us do not have the courage to do. Amen out there.
Amen. And that's to any branch of service, no matter what country you live in. You know, it's serving your country wherever you live, or your you know.
Brand said he'd pee himself. And I'd be calling mommy. Anyway, all right. So
Patrick is over. He's over. Yeah.
Okay. So a new guest we have today, Blake, Patrick Bolger, and also a longtime attendee of F.A.C.E.
Oh, well, welcome, Patrick. And thank you, Dale. Thanks, Kman. You guys all have a great day. Happy Thursday to you. Stand by for Pal and stand by for Patrick. So there you go.
Okay. Thank you. Thank you, Kman. All right, Patrick, I'm going to mute you and we'll go to work. Hi, Patrick. Welcome. Can you unmute?
Ooh.
I'm asking you. There we go.
Oh, there we go.
Hi, Patrick.
All right. Well, hey, thanks for having me. Really appreciate that. And
it's great to have you. You know, you reached out and, you know, maybe it's a message to people that, you know, once in a while you take some action and you can be rewarded for the action. So great to have you here. Why don't we start off like I usually do and tell us a little bit about your journey? If you want to use a camera, that's fine too. If not, if you look like I do in the morning, like this, you don't have to. But
Hey, there we go.
all right, so there you are. So, how'd you get into the business?
Okay. I was part of running a small business when I was much younger, and got into the business probably a little later than most people, pretty far along in my 20s, and got an opportunity, got in, passed the test, and then looked around and said, hey, I have to, be somewhere where I can build a career. And I clawed my way. It was quite an episode to get into what was A.G. Edwards at the time in the late 90s. Um,
Good
had a
firm.
great conversation with a manager, and then at the end of it, he looked at me and said, well, what separates you from the 22 other guys in the last 3 days that sat in that seat? So ended up working out okay. We worked
What'd you
hard.
tell him?
I told him I'll prove that out to you as we go forward, because it was at the end of like what I felt like I said was everything. So he was a veteran. He waited till the tank was empty, and then he asked the hammer question. So
Okay. All right.
but
So you didn't like cold calling, huh? How many dials did you make a day at AG Edwards?
I wasn't in that at Edwards. I broke in that type of scenario. My max was around a little over 200.
Yeah.
And I was in one of those rooms, and you'd see guys like, talking about 300 plus, and the old term would
Oh, yeah.
would come around, and that was a unique experience.
So you spent some time in a boiler room. How long did you last in a boiler room?
I was in there a few years. I did the account opener,
Wow.
the pass the test, and the
Yeah.
where a cold caller, pass the test, account opener, and then you go on, and you're at that point where you're either going to go on and do business, or you realize, you look around, you're like, I gotta, and that was the break to AJ Edwards.
What was
And
your rip?
what's
Your
that?
part of the spread, the rip, they called it.
Oh, yeah, there was.
What kind of were they all OTC and pink sheet and bulletin board companies?
There was a lot of that, and would share a story on a big board stock, and
Yeah. Okay.
but
Just
that
to
was
make you look
back.
legitimate.
That was back when the Asian crisis was going on with the Thai baht. That was with the got to see the ruble devaluation, saw Lehman Brothers trade from 25 to 12. I recall that.
Wow.
I think I can mention them, being as they're not even possible to invest in. So it's not breaching any compliance rules.
All right. So you explained to me that you're not an RIA, but that you manage funds.
Mhm.
And, over the years, you've developed some things that you want to give back to the FACE community. How long have you been attending FACE webinars, Patrick?
Oh heavens! I'm not even sure that I think it's at least a year.
Okay.
And
Yeah.
I could get you guys posted on my website, try and drive as much traffic there as I can. But this is the fabulous morning show, period. And I'm a believer that I'm one of those advocate type people. When somebody is doing something great, it's great to tune in. You should get as much of that out there as you can.
Okay. Well, we appreciate that. Hope we're adding value to what you're trying to accomplish, but you're here to give back. Okay. So tell us what you've developed and how you're looking at the markets now. And if you want to share the screen, you just go to the bottom and click share screen, and you could show us what you do and
Mhm.
how you manage money.
Sure. One of the bright spots of tuning in here is it. I look at it as all hands on deck. I have to be super macro, comprehensive of what's going on in the fiscal condition and the on the planet, and here with the reserve currency and all of that. So that's an the condition under which we're all making decisions on any given day. Beneath that, I basically built an infrastructure that monitors this. So it's a data front end of the business that gives me a clean view of the data that I've assembled over 27 years, or this is year 27 now. I used to be a young guy in the office.
9 3s.
Yeah, hey, there we go. And so that data and the cleaning of that data, the prioritization of it, the weeding out the coincident and laggings and turning it into the, concentrating on the forwards, really starts to give you a look at not only something that has the ability to be interpreted, but you have to, I think there's a fair amount of interpretation that's hugely necessary. You have to know what you're interpreting. The best data in the wrong hands is not worth the paper it's printed on. So when you take that over and you're interpreting it into the system that I started to explain, that's super macro, macro cyclical, like we're used to, and what's jobs, what's sentiment, are we expansion, are we contraction, are we topping, where do we think we are? All of that's imperative prior to what asset classes do best.
Right,
So
what's your stuff saying in here after last week's Thunderbolt?
Sure. The big picture is we're super macro ugly, I would call it. And so that's a caution sign. And then macro cyclically, if we look at it as like the little volcano chart where the left side is expansion, the topping is the zigzag across the top, and the right side is contraction. I have us, just in my view and my interpretation, going over the right hand side. That's where the separation of markets and their behavior and separation of actual underlying data can occur. So
how are you investing or not investing with what you're seeing with a super bad macro? And macro could be very long term, and there could be cyclical stuff that happens within secular stuff. So you missed big rallies. Your clients aren't happy if they see the market going up and they're not participating. So what do you do in this market?
Right. Right now I'm defensive. I don't feel like what we're seeing out there right now has a justification to it. So I can't go with the specifics. Obviously, if anybody wants to contact me, my info's out there. But and we can go into more specifics on a one-on-one basis. But in a general sense, very defensive. My defense is on the field. There is a portion below the macro cyclical, the normal stuff we hear about production and jobs and all of that. That's the intra-cyclical, which you were describing. There are, if you picture a bell curve, tail left and tail right. We tend to, as humans, be geared towards or just pre-programmed towards long only. It's a two-way market. And if you look at some of the most successful people in the history of what we do for a living, they understand both the long side and the non-long side, offensive and defense. So I'm positioned defensively. I don't think this giant
surge. Are bonds part of your defensive strategy? Because it wasn't a good defensive strategy up until a few weeks ago.
Right. And I agree with you. They have not been, and
but could they be?
Aren't. They could be. If you look at tradition, Sir John Templeton, it's never different. When you get into the cycles and the big pictures, you really can line up some very good and interesting data by looking at some of the main headlines in the news and just throwing them on a chart together. And you'll see an order of operation between things like Fed funds, producer price index, some of the popular orders of operation that they're talking about, and you want to make sure you have those right. Surges, we're probably going to have a currency surge, and that's probably going to lead to a risk off.
Which currency?
I can't go into details, but
You can't say. You
let's
can't
call
say.
flight. I I can't, but let's call it flight to safety.
Okay.
And for everybody on your end, you'll know exactly which 2 or 3 currencies that would be. And it also ends up being a risk off in what I feel is the next couple of quarters. I'm a Lakshman Achetan fan.
Oh
He's
yeah.
yeah, I think he does an amazing job.
Yeah.
I'm
I've
thankful.
interviewed him a handful of times. I like
He's
Lakshman.
right up there with Bill Gates and people I might just like randomly hug if I met him.
Oh, I
He's
wouldn't hug Bill Gates. I'd
it,
strangle him.
well, I mean, my thankfulness of productivity from Excel.
Okay.
I stay out of political judgment
All
and
right.
any of that
Anyway.
stuff.
All right. But I'd hug Lakshman.
Yeah,
But
great guy.
anyway, all right. So it sounds like you can't be specific about anything. What are we going to accomplish in the next 10, 15 minutes? Where do you want to go?
We could look at a couple of things in general, just to add a little bit of value. How do we do a screen share here? I do that. Something pops up,
Yeah.
and you had mentioned yesterday, so I have a few of these in the wings. Can you see that? Did I do it correctly?
No, you click the,
Oop,
yeah, it's coming up now. Yeah, data
okay.
matters, and you have the 10-year treasury constant maturity minus 2-year constant maturity.
Yeah,
Okay.
tens, twos, the yield curve.
Yeah. Yeah.
You know,
Okay.
whether we're a trader or whether we're a macro or whether we're somebody tuning in, if you take a look, the gray bars pretty much speak for themselves.
Yeah.
And to be paid attention to. So if we're looking at the big picture of, get the most out of the maximus out of a bull market, and then maybe know when to start being maybe a little more cautious. I think you have some interesting
Where was that? What year was that for the biggest inversion all the way to the left? What year was that?
that's the early 80s.
Okay, yeah, it was yeah, that was right after Volcker or during
Mm-hmm.
Volcker. Okay.
Now also just to mention there's this is the tens twos. So for
Yeah.
the 2 year, the tens 3 months will show a more exaggerated, much more in line with
So you're in the camp that's saying it's really not different this time, that this yield this inversion of the yield curve is going to play out into a recession.
yes, I feel this difference, it's different this time, comes out every time and doesn't really stand the test of time.
Okay.
So
All right. What else do you have to show us?
a little bit of sentiment. University of Michigan, always a great,
Consumer sentiment. Okay, so consumers aren't that confident. If
no.
that's a fairly recent chart, right?
Yeah, that is these are through August, which is my
Okay.
recent compliance trip that I took. I update them usually quarterly, but as you get different data sources, we just looked at a yield curve. Now we're looking at what consumers think. Sort of some rhyming going on there. I'm going to pull this down just to give.
How do you account for all the massive travel that took place this summer and consumer spending holding up?
Mhm.
With the consumer not feeling good, do they just go into debt to feel good and keep spending to feel good?
You look at some of the debt numbers. Some of the debt numbers have risen. Some of the credit card numbers are under pressure. Um, I go back to 2021 with the big surge of capital coming out into the public from all the different programs, and at the time, I'll have some posts on the website that highlight some of my thoughts. And at the time, then I read a newsletter. It was gasoline on a campfire. It's not a bonfire. It'll eventually go out and somebody hands you the bill for the gas bill, and it has to be paid. which is where I feel we are now. It was not genuine, in my view, economic prosperity that just lasts into the next bull market.
Yeah. Okay. Anything else you want to share with us today, Patrick? I mean, if we can't talk about specific instruments and actionable things,
Mhm.
can you talk about your book and how you have them positioned? I'm sure the FINRA wouldn't care about that.
I'm defensive.
Okay, and what is that? Tell me what are you in cash? Some people buy staples, some people buy bonds, some people consider gold defensive. So
Mhm.
defensive is really a broad category.
It is. My lean and my history and my exposure is to the institutional side, to the folks who are in the whether it's a commodity based or hard asset, the folks that can go both long and short in those areas. So I don't think I'm divulging any individual
Do you like
investments
gold?
there.
How about for yourself? You have any gold coins in a
I
coffee can?
no, no bunkers, anything like that. We've been through a bunch of recessions in the history of the country, and I just I feel that the efficiency is knowing from these charts that I'm showing you. The one we just threw up now is industrial production, which rhymes with the others.
Yeah.
And when you're looking at it from so many different points, you can adjust to be like we said, non-offensive, or limit your drawdown is what you want to
Do
do.
you think that do you have confidence in the US financial system, the banking system, where we keep having regionals go away, usually over the weekend so no one notices? And charts like the KRE really didn't participate in this rally, and then we have a little glitch in the banking system that can't clear deposits. That was a new one over the weekend.
Mm-hmm.
Do you believe that there are safe banks and there are banks that aren't as safe? What's your take on what's happening with the banking system?
Mm-hmm.
And then wrap it with, do you ever think about central bank digital currencies being part of our future?
Okay. Bank situation I would call ugly, just in a general collateral sense. A bank runs off of, in a very broad set of terms, it's collected collateral, which is usually some combination of treasuries and some combination of mortgages they've either issued or portfolios they run in that aspect. And when rates ramp from,
Yeah.
2 to 5 or 2 to 4 and change, those collateral prices contract if they weren't under a year. And mortgages are a little longer, they suffer the same thing. And in the mortgage world, or the asset backed world, we're starting to see the underlying asset have some problems.
Okay,
So
what bank does Summit Financial Networks use and Cetera Advisor? Where do they domicile their funds? They use
I clear through BNY Mellon Pershing.
Okay, so Mellon Bank is probably it's been around a long time. So do you
Yes.
personally use Mellon Bank?
It's where my business is, so
Okay.
that is my vote of confidence right there.
Okay.
Moving on to the digital currency throws me a little bit, and the adoption broadly by major governments. Um, I I feel that it's almost too traceable. It looks like they're trying to think about a direction there to go in. I don't know that we're going to see an overthrow into an immediately trackable currency, regardless of never waste a good panic or whatever it is they talk about. It could. It's speculation, so I try not to speculate too much. But if it did happen, we would certainly clean up where capital goes, and eyes would be on it everywhere. Whether it was,
Yeah.
tracking where Washington capital goes, or where yours and my capital goes, or somebody on the street corner. So that would suddenly have that effect. And I don't know if everyone's prepared in the whole system to vote that in.
Oh,
You know,
yeah. Do you think there'll be a vote, like a congressional act? I mean, it is changing the money, and it isn't coming from the Treasury. It's because it's not called a Treasury digital currency. It's a central bank digital currency.
A global move is a little bit of a different opinion. You know, my addressing was for our central bank. I think we may have touched on that when we spoke yesterday, but globally, substitute for the dollar is a tough thing because we do still offer quite a bit of backing versus everything else.
With what, our army?
Well, with the, you know, as comparison, you know, who else is going to offer something more solid where, you know, we don't really have government takeovers that regularly.
Coup d'etats?
The whole thing.
Oh,
You know, I think if you
okay.
compare us around the world, we are still, I don't even know if you'd call us a dirty shirt. We can stand some cleaning, but
Okay.
I think we're still in control of the global reserve currency, and I think everybody's, you know, reasonably okay with that.
King dollar. So Patrick, for people that are listening to you live and see the video later, best way for them to reach out to you, to talk to you, would be
patricktbolger.com.
Okay.
You'll see, you can sign up for the contact us or the free newsletter and updates. I do newsletters quarterly. I do them timely. If I see things getting crazy, you can find me out on LinkedIn. Just go and search patricktbolger.com or Patrick T. Bolger. You'll see my posts. Timeliness of posts. You'll see the December post from last year that called and highlighted highly likely to have a banking issue. And that was 90 days before they hit home. Okay. So it's not really me, it's the data, you know, and the interpretation. So it does have a forward look. It does have a value. And I think it pays for all of us to have clean data. And
all right. So if you want to know what Patrick thinks, and you didn't find out listening to him for a half an hour, go to his website and read his newsletter. Okay. And Patrick, you know, I wish you great success there in Pompano Beach, Florida. Good luck. Spread the word about F.A.C.E. And yeah, maybe put this interview on your website if you like it. And good luck the rest of the fall and throughout 2023. I'll see you in the room.
Dale, thanks for having me. Blake, thanks for putting this on. Team, thanks for being there every morning. Yeah, for everyone who's listening, tell your friends. They need to get on here.
Patrick Bolger, everybody. I
Thanks
tell
so
you
much.
what, you could have been a CIA guy, because I can usually get people to. Someone typed in "tough nut to crack." So anyway, you leave uncracked, Patrick. So congratulations.
Thanks.
But you did an interview with me, so you're now my trading warrior brother. And you know
I
what,
love
guys?
that.
And you know what, guys? Anyone who's here or listens, and you're part of the community, or you're a subscriber, and you want to give back to the community, I'd be more than willing to, you know, set something up for you to share your work with your brothers in arms. So you just started a new trend, Patrick.
Hey, well, thanks. Thank you. Thank you for being here. Don't never stop being you, please. It's greatly appreciated.
You're okay. Well, not many will agree with that. You're a contrarian on that one. Anyway, thank you, Patrick.
Awesome.
Good hunting.
Thank you.
Good hunting, buddy.
You
All
too.
right, everyone. You could join the team in 15 minutes on the Morning Edge for some actionable ideas, and I'll see everyone tomorrow. It's TGIF. Okay. See you guys.
Thanks so much,
Count
Dale.
your pips.